Good morning, everyone. I'm Joan Garnett, and welcome to our GPA Education Station webinar regarding avoiding the pitfalls of non-ERISA compliance, which we don't want any of you to have to actually face. We're pleased this morning to have Jeff Strong as our guest speaker. Jeff works for Sterling Administration, which is a well-known compliance and service company based in California. Jeff has been in healthcare for over 10 years with particular expertise in compliance and underwriting. And he's going to be explaining the importance of ERISA compliance and how to avoid exposure that could put you in an audit situation with the DOL, the Department of Labor, which is something you definitely don't want. The Department of Labor audits are increasing dramatically for ERISA violations. And just during fiscal year 2016, the EBSA, which is the DOL's Employee Benefit Security Administration, that's responsible for plan audits, actually closed 2002 civil investigations with 1,356 of those cases, about 67.7%, resulting in monetary fines for plans or other corrective action. So it can be very serious. For those of you that are already familiar with the Form 5500, which is a reporting mechanism for ERISA, in particular for health and welfare plans that have over 100 participants, there are proposed changes to the form that would significantly increase not only the reporting obligations, but also bring down that participant number from over 100 to over 2, meaning that virtually all employers offering group benefits will have to file a Form 5500. So if that's adopted, the new regulations would apply to plans beginning on or after January 1st, 2019. So renewals after that date would be affected for all ERISA subject plans. So with that, I am going to pass it over to our guest speaker, Jeff Strong. And Jeff, you can take it away.
Excellent. Thank you very much. Good morning, everybody. My name is Jeff Strong, and I imagine that you woke up this morning and said, let's have some breakfast, and I get to listen to ERISA. It's going to enrich my day. So you probably feel like it's a Friday, and it's only a Wednesday. So today we're going to talk about ERISA. Just a couple ground rules. One, I am built loud, so if I get too loud, feel free to either chat in the box or just say, hey, can you be a little bit quieter? Two, I'm a talker. I like to get going, and I go, go, go. So if you have a question, you can tap it in the little chat box. And then three, we are saving some time for questions in the end. So if you're like, you know what, let me have him do the lay of the land, and then I'll go from there. That works as well. All righty, so why don't we start and kind of get going here? So we're going to start off with, so who the heck am I? First of all, you're wondering, okay, some guy's talking to me about ERISA. Well, how does he fit in the world? And so I work for a company called Sterling. We're not a bank. We are not a wine factory or a trucking company. We are a third-party administrator that deals just in compliance. This is what we do. And we are privately owned. The person that created, built, designed, and runs our office is Cora Tejas. She's a former CEO for HealthNet, and then a president for Kaiser and Prudential. So Big Brain knows what she's doing. One thing that a lot of people like about us is that we are very high touch in regards that we do things like today. We educate people, make sure they kind of understand, well, what is going on in that little realm of compliance that I need to know about. Then we also tend to work to help people get things taken care of and keep them coloring within the lines. The main design and focus, and the reason we're called Sterling is because you will have Sterling service, you will always have somebody to talk to, and we make sure, again, you color in the lines and don't have problems. We are based in California, and we work all over the country. And so that's kind of why they said, you know, would you mind talking about ERISA, because that's what I do all day and twice on Sunday. Just a quick view also, some things that we do. We deal with HSAs on the bank account side. We started it back in 2004 because the Medical Modernization Act of 2003, which said, hey, there's these things called HSAs. We don't know if there's going to be enough money in Medicare, so we're going to start offering these. From there, we've gone to HRAs, FSAs, premium-only plans, Section 125, which I imagine everyone's had one kind of experience or another. We do COBRA administration, and then we also do 5500 filings and ERISA wraps. Now, the beauty of this call is that we are going to make sure by the time you're done that you'll understand what the heck a 5500 is and kind of how it works, and an ERISA wrap and ERISAs. Now, when you talk to people, when you're going to lunches and things like that, you may hear ERISA called a couple different things. You may hear called the ERISA wrap. You may hear called plan docs. or SPD. So these are kind of the three things that you hear. I'll explain kind of that as we get deeper into it. So we're going to start with the ERISA wrap. I always do love the way this puzzle, well, the idea is that we're going to put it together. So by the time you guys are done today, I want you to put in your journals, you know what, I put the puzzle together because I had this presentation. So let's start off. ERISA. ERISA is the Employee Retirement Income Security Act of 1974. So the first thing that should pop into your head is, Jeff, this is 2017. Why are we talking about a 1974 law? Well, that's a great question. We're talking about it primarily due to the Affordable Care Act. Now, why do I say that? Because prior to the Affordable Care Act, the requirement was for all employers who had 100 or more employees on a product. So a product is defined as things like medical, dental, vision, life, any benefit offering. As of the effective date, you had to have a file of 5500, and you also had to have these ERISA documents. Now, I will tell you that, you know, even if you had been in the industry for a while, you'd say, you know, that's great, but I remember I had a company and we had 110 people on dental, and we never filed ERISA documents, and there was never a concern. And you're correct, because it was kind of a paper tiger. It was something that wasn't a big deal. If you didn't do it, there wasn't really much concern, focus, or time or energies on it. And then when the Affordable Care Act was put into place, the Department of Labor and the IRS started changing their auditing and kind of went from there. Also do want to note one thing, that I imagine this is the first time you've ever heard of a PowerPoint, so I'll read every single word on here. Now, I hope you are rolling your eyes wherever you are right now, because that would be incredibly boring, and you're all highly intelligent people, so you probably could read. And also, your broker is spectacular in that they're more than happy to offer this to you farther down the road. So what I'm going to do is I'm going to talk about it, and I'm also going to point out points, but I'm not going to read every single word because I don't want to punish you and make you feel like it's a Monday morning. So ERISA, you know, your next question will be, don't I have this already? When you think about ERISA, you may think, well, I think I already have this. You know, we've got it for our 401k and our pensions. You are exactly right. So the 1974 ERISA law covers 401ks and pensions, and there's a second part of it that deals with a welfare benefit offering provided by the employer. So that's what we're talking about. So there's two parts to it. So sometimes, you know, when you're interfacing with people and talking, they'll say, oh yeah, we have ERISAs and our 401k provider does it. That's great. They create the ERISA document, they create 5500s on those sides as well, and proactively provide it to the auditing bodies. The ERISA document on your side, the welfare benefits side, and the 5500s on the welfare benefits side are documents that you maintain for when the auditing bodies come and you provide proactively. Now, the 5500 you will provide to the IRS. So there's a little bit of difference there. All employers must have ERISA documents when requested. It's a federal law, and it really comes about by two situations. One, they are proactively auditing. The Department of Labor has been reaching out to employers to make sure that they are in ERISA compliance. And what they're looking for is they want to make sure that you have ERISA documents. And then the second is when they are researching a complaint. So there may be a complaint that's been put into the Department of Labor. And we've seen this happen a lot where they'll say, you know, while we're here, would you please provide us your ERISA documents and your SPD for the welfare benefits side. So which employers are subject to ERISA? Now, this is important for a lot of people to pay attention to because nearly all private sector corporations, which makes sense, partnership, proprietorships, so you're looking at C corporations, S corporations, LLP, LLC, all those. But I also want you to look at including nonprofits. So sometimes people think, well, if they're a nonprofit, they don't have to meet this requirement. Unfortunately, the Department of Labor says, nope, this is something that you need to participate in and you need to make sure you have. Now, I do want you to note here in red, it says churches and governmental employers are exempt from welfare benefit provisions. So if you are an individual that works for a company that has an affiliation to a church, you would not need to have ERISA documents. Or if you work for let's say, a charter school, even though some charter schools are defined as business, but you are under the school district, then you would be defined as a governmental employer. So all others, you need to make sure you're in ERISA compliance. Now, the second part I really want you to pay attention to, all employers with 2 employers or more are subject to ERISA. Now, that right there, that sentence there is the one that kind of surprises everybody. That one right there, when you talk to a lot of parties, The people that aren't quite as informed will say, no, it's for 100 or more. That's true. It used to be that way. Now it's for 2 employees all up are subject to ERISA. So that is something that I want you to kind of be aware of, and that's why we are on the phone today. So what the heck is an ERISA wrap? Remember I talked to you earlier saying that you'll have different names, plan docs, SPD, ERISA wrap. An ERISA wrap is basically a document that includes welfare plan benefit, your summary plan description, and notices. We're going to see that in a couple slides. But this is just a kind of high level saying, hey, this is what we, Mr. Employer, provide the benefit opportunity to participate in. So you'll notice here, it's a company ABC would offer medical, dental, and vision in life. And so that is what this ERISA is. It's saying this is the opportunity the employer provides. So why now? Why is this going on? Well, a lot of it is the healthcare reform had put in the idea of the bright lights of it. I do want to point out to one thing right here. We have seen an increase in audits since the Cadillac tax was delayed until 2020 and may no longer be in use farther down the road. So what does that mean? Well, remember the Cadillac tax was a tax that was going to be levied if you had very rich benefits that the government would be able to get. So it appears, unfortunately, that this is a driver to help finance healthcare reform. Now, the reason you say, well, why do you say that, Jeff? Because I will tell you, all of my groups, to a man, that have been audited, have been asked, and what will happen, and we'll talk about the procedures here in a couple minutes, have been asked, hey, do you have your ERISA documents? I do. Every single one of them has said, they lost interest after I said I did. And so that appears that they're trying to find people that do not have ERISA, or what is ERISA, or there's no Melissa here, that type of thing, something that they're not really engaged in understanding what it is. So as you can see, they're definitely putting focus on ERISA, and they're increasing the amount of people that they are looking to audit and how often they audit. When I first started talking about ERISA about 2-3 years ago, when it was just starting out, it used to be you had to have 24 documents in a folder sitting on a desk, and they would come knocking on your door. They have now since changed to they're going to make a phone call or they're going to send you an email and kind of go from there, and depending upon how you answer. Now, your next question will probably be, Jeff, this is great, but we now have a change in administration, so is this all going to be gone or not needed as of tomorrow? We will tell you right now, we keep a close eye on this because that's our job to make sure that all parties are in compliance. We are not seeing anything that is causing this to be going away in regards to ERISA requirements not being needed or not being audited or funded. If it does happen, your broker will be very aware. But as of right now, this is something you want to definitely keep on your realm. Now, you remember when we looked at what I did, I focused on COBRA and Section 125 and HRAs and things like that. And all the realms that I deal with, ERISA, this is the one where it's got the brightest lights, we're seeing the most auditing, and unfortunately the most finding. So that's why your broker is saying, let's have you get on a call and let's make sure you're aware of what's going on. I do want to point out the last bullet point on here. Now, if you notice, 90 to 95% of employers will have one violation of ERISA compliance. And that's really because there's the education or not knowing, oh, I was supposed to have that. I thought that 401k ERISA covered everything. Nope, that's not the case. So that's why we're talking today. So this is a great slide. It looks really busy. It said, who should have an ERISA wrap? Now, I want you to notice the far left. You start out with, hey, if you have medical, if you do healthcare, vision, prescription, group life, EAPs. If you notice the left all deals with your benefits. Then you get to the right. I want you to notice about halfway down on the right, vacation plans, prepaid legal, holiday plans. If you are an employer that's offering any of these opportunities, you need to have ERISA documents, which again means that you're providing the fair and equitable language the Department of Labor wants to see. Now, I would imagine that you're at this point thinking, Jeff, that looks great, but, we have a spectacular handbook. We had it done by one of the top lawyers in LA, and that is going to just cover everything. We should be fine. I would love to say yes, but through the eyes of the Department of Labor, they have been crystal clear, and we've seen a couple times where this has caused some heartburn for some clients, where they say, no, we need to see your SPD and ERISA summary plan description, which specifically spells out what we want to see and meeting the fair and equitable language. So that's something to be kind of astute about, because a lot of people sometimes think, if I have a spectacular handbook, I should be covered. Unfortunately, that is not the case. So remember I was talking about that was the auditing procedures that, they used to have a folder and they'd want to come see it from there. Well, now what happens is a phone call is placed in an audit. Now it can be from three governmental agencies, which we've talked about, the IRS, EBA, and the DOL. And the employers want to be audit ready. The call is followed up by an email, and you have 40 to 60 days. Now, one thing that I thought is really kind of neat that shows you here is the code. So the codes in the email or letters will identify what is being audited. Code 53 is a pension plan review for your risk on that side. A code 50 is a health and welfare plan review. Now, I will tell you from my clients and from the market, one thing you want to be aware of is they have a tracker on that email. So what does that mean? That means they sent you an email. Then once you, even if you delete it or you click on it and open it or not, they have a notification that you received it. Because what happens is I've heard of clients try to say, I never got that email. Can you send it again? And they say, oh, unfortunately, we sent it to you on November 12th at 3 o'clock, and it appears that you opened it or you did touch it, so you should have been aware of it. So that is something to be aware of. Imagine like you're kind of feeling, a little bit EBGB that it's a big brother, but that is kind of what is going on in regards to this. So just want you to be aware that that is something that is out there. The employer has 10 to 15 days to comply. Now remember, answer 1 to 18 questions. Now this is very important. That scale, they can ask up to 18 questions that makes you meet the ERISA compliance. Depending upon how you answer, it may be 1, it may be 3, it may be 10, it may be 18. So a lot of my clients that, remember I mentioned, had been audited, they said, the second question is always, do you have the summary plan description or SPD? And they say, yes, I do. I've got my ERISA documents. And remember I mentioned that the auditors seem to lose interest. Well, what seems to happen is they seem to ask, okay, please provide me your ERISA SPD and a financial statement showing that you're a functioning entity. That part has been very constant. The need or definition of a financial statement, some of it can be tax returns, some of it can be part P&L. Now again, you seem like you're probably a pretty dialed in group if you're jumping in on an ERISA webinar. Why do they ask for the financial statement? I do not know. It is my white whale, and I continue to search to discover why do they care if you're a functioning entity. I would think if they're calling you, they would know that you are a functioning company, but that is kind of how it is. So interviewing the employer's responses, the government agency has 7 to 10 days to kind of look and give a review. If the violations are not corrected, then financial and legal actions, AKA penalties. So this right here is the main slide. This is why we are saying, hey, we'd like to grab you and borrow a couple of minutes of your time on a Wednesday morning because of this right here. Now remember, I had talked to you about the most important part of my little realm is ERISA, make sure you're in compliance because of the auditing and the fining. And this is why. Now if you can notice, if you look at this, this is big water. We're in deep water here. Why do I say that? Well, you have $1,000 per employee may be applied for failure to provide a summary plan description or an SPD. And we're going to see a little bit more what that looks like in a little bit. But that is very big. Or the IRS can impose $100 per employee per day till compliance is met. Now, we see them doing one or the other. I've never seen them do both. Now, I want you to think about, let's just say, a medium-sized company of 30 employees. So I've got a company of 30 employees, and everybody says, you need to have your ERISA documents. And say, I'm not going to worry about it, that's fine. And then the Department of Labor says, we need to see your ERISA documents. They are not able to provide it within the time, and they get fined. So that means that they've got 1,000 times 30 because they have 1,000 per employee, 1,000 times 30 or $100 per employee per day. So that's a lot of money. And for that size group, that can be incredible. That can be almost the game ender for them. So it's important to keep that in mind. And again, this is, I just want to stress, this is something that we are seeing the most auditing from, compared to others. Now, to look at the third bullet point, the DOL can impose civil and criminal penalties ranging from tens of thousands of dollars to hundreds of thousands of dollars. We have never seen that. We have never seen to the point where they say, this is it, we're going to charge tons of money and put you in jail. That would be someone that is adamantly fighting this proactively and not realizing that, this is not going to end. So ideally, it's going to be one of those first two that you're going to see, and that's why we want you to be aware and kind of be in the know, as they would say. So what is the DOL request? So this brings up a great point. So you're going to see 3 slides here. You're going to see one slide that means that you, Mr. Employer, will have information that you would need to provide. One slide that your carriers, your benefit carriers will provide. And then a third slide. And that third slide, which is actually the first one, which is this slide here, is what an entity such as myself would provide. So now the question comes about, okay, Jeff, so how do you fit in this world? Are you just some guy who talks about ERISA and you go walking down the street? How do you participate in the ERISA realm? So how we participate is this. Now, the whole situation comes about due to the ERISA requirement is a Department of Labor requirement and need, and you have to fulfill. Your insurance carriers that provide your benefits are regulated by the Department of Insurance. They're not regulated by the Department of Labor, so they've politely said, you know, that is not our problem. So have a nice day. Oh, okay. You deal with your industry and what you do. So you don't focus on writing these type of documents and legal stuff. So there's a hole, and that's where an entity such as myself, a company that all we do is focus on compliance, comes in and says, hey, we will help you out. We will help you provide the documents that you don't have as a functioning employer and that you don't get from your carriers. We will fill that hole and make sure you're in compliance. So that's kind of how I fit in that realm. So now let's take a look at this. So you'll notice, number one, what you need for your ERISA wrap is going to be a bunch of these documents. And one of them is your signed plan document agreement, which basically says, yep, this is who I am and this is how I deal with. Now you'll notice number 2 is in red. Now we've talked about it already a couple times, and I've said it, but it's the summary plan description, the SPD. The reason I have that in red is that's the one that you are going to hear when you talk to your friends, as you're interfacing with people. This is the most important thing. The summary plan description, or your SPD, that's your workhorse. Now, why do I say that? Because that's the document that you will have on file for when the Department of Labor comes calling. That is the document that you will have that you provide to your employees. You provide it proactively during open enrollment, special circumstances, new hires, or if asked in writing, they have 30 days to provide. So that is your summary plan description. Now let's just talk about that really quickly while we're focusing on that. So questions have come up recently. Well, Jeff, you know, we have 50 people, and so do I have to print up the summary plan description 50 times and give it to them that way? No, if they have access to email, you can email it to them. And then, you know, now as technology moves more and more forward, Jeff, we have an intranet here. Can I put it on the intranet? You can, but what you need to do is you need to have clear line of sight that everyone was exposed to the opportunity. So what the heck does that mean? That means what you could do is you can put it on your intranet site, and then you can send out an email to everyone and say, everyone, this is where your ERISA SPD is. Please respond yes that you know that, or you can set your email to have a notification so that you can let everybody know. Now, why am I telling you this? I'm telling you this because the Department of Labor has been crystal clear. They don't want to see that you just took the SPD and put it in the break room and that was it. They want to see some proactiveness. Now, with that being said, through all the auditing we've seen up to even today, we have never seen them ask to see, I want to see that you provided your ERISA documents to John and Fred and Mike and Cindy and Martha. They haven't drilled down or audited to that level. But I tell you this because I imagine one of you on the phone is very detailed, likes to dot their I's and cross their T's, and for them, that fits perfectly. So hopefully that's kind of giving you a little bit a clearer view of that part. Let's go to number 3. Number 3 is the summary annual report. So what this is if you are a client that is, have 100 or more people on a product as of the effective date, as you'll know, you'll hear about this a couple times, then you'll need to file 5500s, and then with that, you have what's called a SAR report, or a summary annual report, and it is the worded version of the 5500s. Now, at this point, hopefully you're rolling your eyes and feeling like you fell into an IRS rule book, but that is just something you would only need if you had over 100. So let's say if you're a company of 30, it would not be something the Department of Labor would ask for. Your certificates of credible coverage, and then finally the notices. And this is stuff that we, Sterling, would provide. So let's go to the next slide. So these are the 5 things that would be requested by the employer, as an employer. Oh, look at number 1, with good old financial records. So we had talked about that earlier. And again, that can be anything from taxes to a P&L statement. Something shows that you are a functioning company and entity. I want you to look at number 2. Number 2 is the latest fidelity bond. Now, not all companies have this. Some companies do, some companies don't. If you do not, the Department of Labor is fine with that, and that's not a problem. If you do, they just want to see what you have. 3 is minutes of the board of directors or a plan committee. Now, if you have a board of directors, they just want to see minutes. They do not want to, they don't necessarily have to be pertaining to discussing of ERISA or benefits. They just want to see benefits. Now, with that being said, I had a very, very nice gentleman one time asking me, well, do I need to create a board of directors for my company so I'm in compliance? No, you do not need to. So that is one of those things that if you have it, great. If you don't, that's not a problem. Compliance with HIPAA. I'm sure that everybody on this call knows HIPAA and it's probably having a little bit of a cringe because HIPAA can definitely make things crazy if you're not in compliance. So compliance with HIPAA non-discrimination rules, basically how are you dealing with Social Security numbers, what are your policies? And then finally, copy of written procedures of certificates of credible coverage, how do you deal with your COBRA? And these are things, if you're not quite sure about, you know, it's always good to refer to the lovely people on the line here, and Joan or Nick can definitely help you out with that. And finally, this right here, these are the 8 items you will get from your insurance carrier. This is stuff you normally get during open enrollment. So you're looking at some of this stuff and you're saying, okay, I'm not quite sure what this means or that means. This is stuff that your carriers would provide to you. Now, if you were that individual that I had talked about a couple slides ago that likes to dot the I's and cross the T's, and you're seeing this and you're saying, okay, I need to get in compliance, I'm going to get this all lined up. I'm going to get the ERISA documents put together. I'm going to make sure that I have all the stuff we have here in the company put together. And finally, I'm going to reach out to my carriers, my insurance carriers, and ask them for the documents, even though we have 6 months to go until our renewal. What you're going to find is this. Your insurance carriers are going to say, that is wonderful that you want all these documents. You call me when you get audited, and we'll give it to you then. So they're not very proactive with it. So what I tend to say is, if you're that person that wants to dot that I and cross the T, send them an email and have an email back from them saying that. So if something ever did happen and you got audited within that time period, you can politely say, you know, guys, you didn't provide what I needed, you can pay the fine. So I just want to give you kind of the lay of the land on how it works in terms of a flow or function aspect. So the ERISA Wrap services that we do, what we do is we write that ERISA document and SPD for you. We also help make sure that it correlates with the 5500s of the summary of material modifications or amendments. So as you make changes to your plans, oh, there's that good old SAR. We help you with kind of guiding some document retention and such with employees access to rights. All those fun things. And then finally, those good old notices that looks like the alphabet got into a fight, QM, CSO, and WHCRA. They all have important notice meanings, though. So this right here is a summary plan description. So why am I showing you this? I want to kind of show you what it is. As you can see, it's not super hardcore. It's basically saying the name of adopted employer, ABC Products Company. Yep. Your plan number, which is, this one is 501. Now, I don't know how in-depth you get into the compliance part of employee benefits, but for some of you, that plan number, it's also known as a health and welfare plan number. You've probably heard it for Section 125. You also hear for it if you have to file 5500. That's that number right there. And there is some correlation that you do have between your ERISA documents and those codes. And then your kind of your plan year. So this is just kind of showing you quickly what it looks like. So this right here I wanted to show you is kind of what your SPD would show on pretty much the last page. Now, when you're dealing with the ERISA documents, you deal with two things. You deal with the cost, and you also deal with how is the contract written. So at Sterling, what we do is we write the document to act like a quarterback. So it says you want to know about the medical plan, see the current medical plan they have right now. You want to know about their dental plan, see the current dental plan they have right now. And if you notice, it's written at what's called product level. So if you notice here on the very first line, it says PPO. We don't say it's an Anthem 1520 PPO. We don't say it's a Cigna EAP Plus. We don't do that. You write it at higher level. Now, I want you to notice on the right, the eligibility. Now, a lot of people really like this because some of the carriers have stopped defining what the waiting periods and structure is, where the ERISA document does. So the ERISA document says, hey, what is the waiting period? So you notice here it says First of the month following 60 days is the waiting period. Okay, so a lot of people like that because they do have somewhere that it's evidence of what the waiting period is. Now, I also want you to note something here. It says employer-employees contribute towards the employee-only coverage. So what it's saying there is this. If there's a contribution between the two parties, so that, going back to our PPO has a contribution, and you're thinking in your head, oh, yes, we have our PPO plan, and it's an 80-20 contribution. What we do is we say, let's write it at high level. We say there's a contribution between the two parties. Now, why would we do that? Because remember, this is documents that get audited. We do that, and we say there's a contribution between the two parties because for all we know, your company goes gangbusters, things go great, the CFO comes in the office and says, let's change it to 90-10. Or, oh my goodness, we're having a challenge, we need to go down to 70-30 contributions. Or, you know what, we're going to go to a flat dollar amount. This allows the document to have flexibility. And the most important part is to make sure that this document meets compliant needs, and so that it has flexibility. Now, I want you to notice also where it says dependents are 100% employee paid. Now, the beauty of that is it basically says, hey, in this scenario, the employee is paying 100% of it. So that is kind of how you want to structure it. And the reason I show you this is just to give you a feel of which an ERISA document would look like. And I also wanted to just point out really quickly, dental HMO, you'll notice there, it says 100% employer paid. Now, that's a great point to bring up. Sometimes people will say, you know, I don't include the FSA on the ERISA document because we don't pay anything. The employee pays 100% of it. Nope, you still need to include it. You know, or hey, we have AFLAC that comes in. That's fine. You know, the employee pays 100%, so we don't need to include it. Nope, still need to include it. Why? Because remember, the Department of Labor defines it as the benefit offering that the employer is providing the opportunity. So what does that mean? That means that AFLAC, the employer is saying, Mr. AFLAC, you can come and talk about it. Or the FSA, we're going to offer you the chance to participate even though you're making all the payments. So please keep that in mind. That's a very good thing to know. All righty, let's keep trucking here. So now we are going to go into 5500s. There are two roads for 5500s. So we're going to kind of go in that realm, and we'll kind of see how it all correlates together. So 5500s on the 401k and pension side, also with the client's ERISA, is usually handled by the vendor. So remember, the 401k, ERISA 5500s, the vendor handles them. Now, the second one is the welfare benefits on the 5500s. Now, Joan was very nice to let you know that there is some kind of a view that in 2019, the 5500 requirements are going to drop down to even the smaller groups. And that can be quite challenging. So we will definitely be keeping an eye on if that's going to continue under the new administration. Again, as of right now, we're not seeing anything that's changing. So it would be the classic case of until someone tells you differently, gone trucking. But for right now, because we are in 2017, 5500s on the welfare benefits side are only required for groups with 100 or more employees on a product, see example there, dental, vision, life, etc., as of the effective date. So hopefully when you leave today, you're going to say, okay, there was some talkative guy who really chatted about ERISA, need to make sure we're in compliance, and then two, the definition of 5500s. Now, why do I keep honing that or bringing that up? Well, we're going to look at our examples here. So we're going to go to Monster Power Drink Company. I promise it's not supposed to be Monster the drink. It just was an example. So if we have Monster the drink online, please don't come after me. So Monster Power Drink Company, they now have 120 employees as of 1/1/17. Do they need to file 5500s now that there are 120 employees? So right now, I bet you're thinking in your head, well, let me see. Jeff has told me 5 times that I have to have 100 employees on a product. So let me look. Well, in Monster Company, I do not. I don't have that many, so no, I don't need to file. Yep, very good. In fact, if you tried to file, they would kick it back and say you don't need to have it. Now, on all other products, medical, dental, and vision life, the most they have is 80, so they would not need to file. So hopefully I'm not talking too fast. So if you're a company of 120, and out of all your products you offer, medical, dental, vision, life, you have 80 is the most. We have 82 people on life. You wouldn't need to file because you don't have over 100 on a product. If they had let's go back to our good Monster example. If they had 120 total individuals on the benefits, that's employees plus their dependents, do they need to file a 5500? Nope. It is all based off number of employees. So that's something important to keep in mind. So if we had 120 employees on, let's say, life, then you would need to file 5500s. And I will tell you, what you will find is 99% of the time, the driver will be that life product, that you'll have 80, 90, 50, 60, and all the other products, but because the employer pays for a life insurance product for everybody, it tends to be you'll need to file there. So keep your eye on life is always a good way. That sounds very existential, doesn't it? Keep your eye on life. So, all right, let's move on here to finally, Monster has 120 employees on 12/31, but experiences layoffs. And as a result, on 1/1, they have 80 employees. So remember, their effective date's 1/1. They have 80 employees. And then very next day, on 1/2, they decide they've made a mistake and they hire everyone back. Do they feel they need to file? So this is probably the part where you go, I didn't realize I was falling into a calculus class and a train was leaving at 2 o'clock on Wednesday and another train was leaving at 3 o'clock on Wednesday. So I promise this is the last of this type of question. But I want to point out, remember what we've stressed. We've stressed that you had 100 or more on the effective date. So let's take a look here. On their effective date, 1/1, they had 80 employees. So they wouldn't need to file. Even though the very next day, they now have 120 employees on, let's say, life. They don't need to file because it's as of the effective date. Because you realize, you've got to think, okay, that makes sense. The IRS has to have a place to draw a line in the sand so they know to define it. So that is why that is the way it is. All righty, let's take that and go to the next slide here. So 5500 is when to file. When does the company need to file their 5500s? Remember, this is all on your welfare benefits side. You need to file the last day of the 7th month following the start of the plan year. So I put an example here for you. The group's effective date is 7/1/16 and it ends on 6/30/17. Therefore, they would need to file their 5500s for the plan year 7/1/16 by 1/31/2018. So hopefully your head hurts a little bit. And can you get a little bit who's on first, what's on second? And also partly, ideally, you want to use or find an entity such as myself or others that will take care of the 5500s for you. Why? Because you have to fit in the box and the information has to be correct. But if you're one of those individuals that says, you know, I want to know and I want to have it on my head, an easy way to figure out is to apply 7 months to the end of the plan year. So if you look at, it was the end of the plan year was 6/30/17, 6 + 7 is 13, thus 1/1. An easy way to remember that or think about that is if you're an individual that knows military time, 13 is also 1. So 14 is 2, so on and so forth. But again, you have probably a lot of things on your plate, so I would recommend that you would have somebody who deals with this all day long interface with it. But if you want to know and do it yourself, that's how you would do it. 55 high filing, what? So in a large company, the 55 discretion will come up at some point. So if you are a company with some good size, you want to kind of double check and make sure, did we need to have filed in the past? Hey, I'm the new HR person. I just started a week ago. I don't know if they filed last year or the year before, You want to make sure because multiple years not filing makes for a mess. And how it works is if you find that, you know what, we were supposed to have filed since 2013 and we have it now, okay, that's not good. So you've got 2 avenues. You have one avenue that we just keep going and we pretend it doesn't exist and it'll go away. Wouldn't recommend doing that. You have a second avenue where you say, okay, we need to get this cleaned up. We need to reach out, and what they have is something called the Delinquent Filer Program, which the IRS says, hey, we understand it's not a perfect world. You've discovered that you were supposed to do filings and you didn't. We will cap the penalty and you can go down that route. The other route is to pretend it doesn't exist. It gets found out by the IRS, and then, as you would imagine, the hammer comes down and there's a lot of money that will go out the door. So next part is, what triggers the audits? Without question, the number one thing that triggers an audit, without question, is you going up and down. And it seems crazy and it seems almost counterintuitive to normal business, but if you were a company that is 110 people on dental, so you file, and then the next year you go down to 80, and then the next year you have 200 on vision, you have to file, and then next year you drop down to 80, that will cause an audit. That is the number one thing. As sure as I talk a lot, that will cause an audit. So keep that in mind when you're looking at benefits. Does that seem fair? No, not at all. but that unfortunately is the way the world works, and that is the #1 constant we've seen in the 5500 realm, that if you're going up and down, that causes some heartburn. And then, a question comes up, how do most brokers handle these type of situations? So the reasons you want to have a good broker is a good broker will be very aware and very astute, and when you become a partner with them, that is one of the things they first dig into. Well, where are you? And let's see where we need to make sure that you'll be, because it's unfortunately not something that goes away. It's kind of like, they always say death and taxes, same idea here, that you will need to make sure you file. So now let's meld the two, or kind of put the two together. We've got the ERISAs that we talked about earlier. Hopefully you really enjoyed it and thought, wow, that was fun. In fact, if you want me to do it again for you later on, we can always talk about it. This is where you roll your eyes. And the 5500s, now we're putting them together. So our ERISA documents are required every year. It depends on how you write the contract. If you write the one that's specific and requires lots of details and change, then yes, you would need to update it every year. If you write a document that is very high level and does not need 5500s, so if you are a company of 50, I have 50 employees, I don't need to file 5500s, then you can write a document to be very high level, which is known as product level, and it'll be good for 5 years, because the probability of you making adjustments to your product is very low. So, example, remember we went back to our earlier slide that you have HMO, dental, and vision. Yep, that's good. So if I have HMO, dental, and vision, as my broker moves me from Cigna to Aetna to United Healthcare, I don't need to update my documents. I've added 10 more HMO plans. You don't have to update the document because it's written at high level. Now, if you have 5500s in play, that's a different story. Why? Because you have to file 5500s every year. And these two documents must mirror each other in regards to the effective date. So this is something very important to remember. You don't have to remember how it works. You just need to remember, wait a minute, we have ERISA documents and we have 5500s. These two needs to dance together. It needs to create fluidity. They have to mirror each other on the effective date. So a common question comes up, well, what do you do if you have 5500s that are for 1/1 and you're putting your ERISA document in 5/1? Well, the first question will come up, why would I put a ERISA document in 5/1? You would do that because you realize, oh my gosh, we're out of compliance. We do not have an ERISA document. If we get audited next week, next month, tomorrow, we've got exposure. We need to take care of this. But our ERISA documents are over there. How do we get them to sync up? Well, there's two ways to go. One is to backdate. The other one is really more what the preferred method, and that is to reinstate the document. So what that basically says is, hey, when you first started your 5500s, you were supposed to have ERISA documents. So hopefully you feel like we're going in a time machine going all the way back to the very first slide that we talked about. And we said, hey, in 1974, if you had 5500s, you had to have a ERISA document as well. So you're supposed to have those two at the beginning of it. So what we do, and this is driven because the person who runs our ERISA department is a former DOL auditor and ERISA attorney, so she knows, and she's the one that used to do the phone calls, is you say, you know what, it's called a reinstatement of the previous plan. So you'd say, hey, they had a 5500, we're not sure where the ERISA document is, we're reinstating it, and off you go. And that's how you would stay in compliance. Again, this is very inside baseball, but I wanted you to be aware of it, just kind of how it works. Ideally, you don't have to run out and do that unless you were making your own ERISA documents, which I wouldn't recommend. And that really is kind of talks about 5500s and ERISAs. Do we have any questions? I'm more than happy to answer anything that comes up. That's always a good sign to me. That means that I probably put you at ease and you've got a good feel of ERISA and what's going on. Did someone have something to say?
Well, Jeff, if we could move to the contact slide too, that would be great.
You bet. And so this is me. My name is Jeff. How are you? Feel free to reach out to me. And if you're an individual that says, I've got some questions, but I don't really want to do it in front of everyone, more than happy. Please shoot me an email. Hey, Jeff, I got a quick question. We're a blue-collar company with half of our employees in China. Do we need to have an ERISA documents for the Chinese people or the Chinese section? Feel free to shoot me an email, give me a phone call, or you can also reach out to Nick. And Nick is emails here in his phone, and he's more than happy to kind of connect and help however he can.
Well, Jeff, that was great information. Thank you so much. It's really important, and I must say the information was a little scary, especially the fines associated with noncompliance. So that was great information for our participants. And also for all of our participants today, please know that as a client of GPA, we will provide ERISA compliance, and that means, you know, the SPDs and the 5500 development and filing, as well as COBRA administration at no charge. And we do that exclusively through Jeff's company, Sterling. The people there are technically brilliant. They do a great job. They're very responsive, and they've been a great partnership for GPA and for our clients. So we appreciate all the assistance that Sterling gives us.
Yeah, I appreciate you. And I do want to say to everybody on the line, I'm taking off my Sterling hat and I'm taking off my partnership hat. Just as somebody who works with the market all the time in regards to brokers and clients, it is very unique to find a broker that says, hey, I will take care of this 5500 and the ERISA for you. We'll take care of that. We'll make sure that it's streamlined and running smoothly. It's nice. It shows that they're going to work hard for you and care for you, which is a nice thing to see. And also, you've got 10,000 things on your plate right now. I imagine as we're talking, you've got emails building up. So it's nice that they'll say, look, we'll take care of this and get this ironed out. You go focus on other things. So I, again, just say that strictly as someone who deals with this all day long. So,
exactly. That's a great point. And also, if anyone would like a copy of the webinar, just email Nick Garnett. His email is on the screen there, and we'll be sure to get you a copy, or you can email Jeff. He has a copy of it, obviously, as well, so we'd be happy to help out there. And, you know, at GPA, our mission statement is we assist our clients with a complicated world, if I could say it, would be great, wouldn't it? It's a complicated world of insurance and compliance, and Sterling has made that very easy for us to offer that. So thank you again, Jeff, and thank you all of our participants. We greatly appreciate you taking the time to listen to us today.
Yes,
thank you. Questions,
I
don't think there are any questions, so we could.
Okay.
Yeah.
Excellent.
So
well, then I will put in my journal. I'll put in my journal today that I did a good job, that people were satisfied or they fell asleep, one of the two, right? So anyway, thank you guys. Really appreciate the opportunity, and take care.
You did. Thank you, everyone.
Right.
Have a great day. Bye.